Okay, welcome to video 2. Why hasn't the problem been solved yet? Well, the Holy Grail of Trading has been hard to find because we've been looking in the wrong place. This is the biggest problem. See, even though we know that it isn't possible for an individual investor to really control prices, some folks are doing very well. Others are losing their shirt. So we assume that the difference between the two is knowing how to time your entries and your exits. You know, the secret is not in some secret method for timing exits and entries. It's not in inside knowledge of what's going on inside the corporation. Even though you hear about that, you can get in big trouble. The secret is in understanding, either consciously or even unconsciously, the dual principles of money management and positioning. Now, I'm going to ask you a question. I know you don't have some holy grail method of picking stocks, or you wouldn't be here. I happen to know from a pretty reliable source that that isn't possible anyway. However, let's say you do have a method that produces 75% winners. That's pretty good, isn't it? Surely you can make money by being 75%, by being right 3 times out of 4. Sure. Now I'm going to show you something very interesting in this video. Would you believe that it's possible to have 75% winners and still lose your shirt? Yeah, I'll show you. Furthermore, would you believe that it's possible to have only 45% winners, for example, more losers than winners, and still make money? Yeah, that's true. You'll have to tune into the next video to find that out. But first, let's look at the principles that make it possible to lose with more winners than losers and still lose overall. Let's consider our kick butt red and green light system, or whatever it is that you have that picks the winners, okay? Let's say that most of the time we're right. An average trade returns 10%. That's pretty robust, isn't it? But every once in a while we have a loss. You see, assuming that we don't have time to stay online all day during the trading day and monitor the market minute by minute, we might hold the stock overnight now and then. Now you know about opening gaps. If you don't, you will soon. Let's say we have one stock that gaps down overnight, 25%. Now that's okay, right? I mean, after all, we made 10% 3 times in a row, you know. That's a 30% gain. In fact, that's better than a 30% gain. If we had a 10% gain and add that to the account, then when we do our next trade, we trade our original capital plus the money from our 10% gain. That's increasing along with the original capital, and then the third 10% gain is based on the original capital and the returns from the first 2 wins. Yeah, you know, that's better than 30% plus. The 30% plus gain we return, that we realize, is better than the 25% loss, right? Wrong. Introducing the little green-eyed monster called the martingale. This is what makes all gamblers and most stock players broke. The martingale is a mathematical concept that's also known as the gambler's ruin. Here's how this evil little monster works. When you have a loss, you have to gain more than the percentage that you lost just to make it even. In fact, even if you win first, you have to cut your losses by a lot shorter than you might think just to stay above water. I'm going to remind you of the numbers in our example, then we'll look at a little sheet. And I'd like for you to check my numbers with your calculator. We have 75% winners, 3 winners in a row, 10% return on each, compounding, making more than a 30% gain. Then with only 1 loss and only 25% loss, well, that sounds like a 5% gain, doesn't it? 30% minus 25, 5% gain. No. Let's see how this plays out for real. So here we are starting out with a $10,000 balance, and we've got this great trading system that helps us find a stock and pick the time to get in and get out. And we get $1,000 back. We get a 10% return, $1,000. So here's our new balance. It's $11,000. Well, the next trade, we find another winner. Find a good stock. We get into it at just the right time. We get out after locking in a 10% return. So we start with $1,000. make $1,100. Now our new balance is $12,100. We're ready for trade number 3. $12,100 balance. We make a 10% return, just slam dunk it, and there's $1,210 more in our account. We have a total of $13,310. Gosh, I love this trading system. You know what? We can take a loss. That'd be okay. So we have a one-time loss here, 25%. Ooh, that stings a little more than I thought. That's $3,327.50. Here on the screen we left out the 50 cents. I made it a little better for the story, but gosh, our new balance here is $9,983. Didn't we start with $10,000? We had 3 wins in a row, 10% each, compounding, and then just one loss at 25%. There that little bugger goes, the martingale. What seems to be a winning system gets wiped out by one loss, and not as big a loss as you might think. If you lose 10%, you must gain 11.11% in the next trade just to be even. If you lose 20%, you've got to gain 25% just to be even. What if you lose 25%, like in this example? Just to be even, you must make 33 1/3% on your next trade just to be even. What if you had a 50% loss, for example? That's not unheard of. You'd have to double your money. You'd have to get a 100% gain in the next trade, or the next trading streak at least, just to beat the martingale, just to stay above water. This little green-eyed, profit-eating monster plagues all games of chance and all zero-sum economic systems. It's nothing personal. He's just a carrier. He's a little gremlin whose motto is, "A fool and his money are soon parted," and he takes it from my pockets to somebody else's. He sorts the money from the pockets of the unwise and into the pockets of the wise. Perhaps you've heard a saying by Warren Buffett, one of the greatest investors of all time. He said, "If you've been sitting at a poker table for 15 minutes and you don't know who the patsy is, you're the patsy." The first thing I learned in full contact kickboxing was keep your hands up. And here's the best piece of streetwise advice you can get on Wall Street: don't be the patsy. In the next video, we're going to see how to slay the martingale, and how that killing that little beastie can take a horrible trading record like only 45% wins and make an astonishing return with it. That's right, you can actually lose more often than you win with proper money management and still come out ahead. And I'll prove it. I'll see you on video 3.